So today's program, the state of California real estate and insurance. And we are lucky to have three of our own very own experts. And we look forward to an insightful discussion on the ever-evolving landscape of real estate and insurance in California. As you know, just by our opening comments to each other, this is a fascinating subject. They will discuss the challenges, I'm sure, of rocketing home prices, dwindling insurance options, and the growing risk of natural disasters. So first, we are going to hear from Betty. And Betty Taisch is a top 1% realtor with over 30 years experience, and she's made her mark in Bay Area real estate, known for her deep knowledge of the market and unmatched negotiation skills. Betty helps clients navigate the competitive landscape of residential and luxury properties. We also know she belongs to more book clubs, goes to more speeches and events than anyone else we know. Our second speaker will be our very much loved past president, Craig Stewart Adams. He also is a seasoned real estate broker specializing in luxury homes and property investments in the Bay Area. As a former and very dedicated one of our past presidents, he brings decades of experience as well as a great sense of humor and deep passion for helping clients make informed real estate decisions. He's also learned about how to be really creative in very challenging times. Then Jack Shea is a legend, although he would not admit it. With nearly 6 decades of insurance industry experience, Jack is a respected figure who has played a key role in ensuring major projects like the San Francisco Bay Bridge in Diablo Canyon Nuclear Power Plant. Now, I don't know about you, but I think that's a big deal. Jack continues to guide businesses through the complexities of insurance with expertise and trust. So to take it away, let's spotlight Betty Taisch.
Good morning. Have you had any sleepless nights worrying about selling a house, buying a home? Am I going to have my insurance canceled? Am I going to be able to get insurance when I buy a home? What is this NAR settlement? All of this stuff that's in the news media, some of it's true, some of it is really not. So what is the NAR settlement? We're going to hope to enlighten you with answers to a lot of your questions about this today. NAR stands for the National Association of Realtors. And we have a code of ethics if you are a realtor, and the code of ethics is quite long. And one of the code of ethics is negotiation about commissions. So what's this all about? We always negotiate on commissions. Back in Missouri in 2020, somebody signed a listing agreement, sold the home, and then later thought, I paid too much. I'm paying too much in commissions. And so they filed a lawsuit and filed it. The DOJ, Department of Justice, has been against NAR for years, thinking that we fix prices across the country. Well, that is so not true. So what happened with this lawsuit? It's called the Sitzer-Burnett lawsuit. And after years and so forth, it was settled by NAR to the tune of $1.8 billion. And NAR settled this for reasons. NAR admitted no wrongdoing whatsoever because commissions have always been negotiable. Yet the trial that took place in Missouri took not even 2 hours. There was no, shall we say, arguments from NAR. It was strictly from the sellers. And that affected every realtor in the United States. 1.8 billion, which then was 5 times. So it was like a $5 billion settlement. So NAR ends up paying $418 million in settlement. This also involved 4 other major 5 companies: Keller Williams, Anywhere, which is Coldwell Banker, Remax and Home Services. One of these companies settled right away, which then set a precedent. So NAR, even though they wanted to appeal. So that's what happened. And then there were many copycat lawsuits as a result of that. But what does this mean to you as an individual, a buyer or a seller? The main thing that has to happen from this settlement, two main things. Number one, well, let me go back. Traditionally, when a buyer bought a home, the commission was signed by the seller with the listing agent, and that listing agent got the commission, and then that was half of it or whatever percentage was shared with the buyer's agent. So it was already baked into the price that the buyer technically was paying the commission. So what changed? No longer can the commission be baked in, quote, can be paid by the seller unless it's requested. So two things. When you have a listing agreement signed, you only say what you're going to be paying the sellers or the listing agent. That's the most important thing. And you're not allowed to put that in the MLS where we traditionally have advertised brokerage fees. I like to say brokerage fees or professional service fee. It's not just a commission. That's my personal opinion. The second major part, and Craig will go more into this, is that buyers per settlement now, before they can see a house, a property, have to have a signed agreement with a buyer's agent. And in that signed agreement, the buyer will now negotiate with the agent how much to pay the agent. And traditionally, and I can talk numbers here because it's out in writing everywhere. It used to be between 5 and 6%, sometimes 7% brokerage fee. But I have to remind you all, if you have a 6% commission, 3 goes to the other side. This was how it was. 1 goes to the company, not to the agent. 1 goes for marketing, professional services. We are left with 1%. And then half of that goes to the IRS. So that's just something to kind of keep in mind. But now it has changed. We can no longer advertise in the MLS, multiple listing service. We can advertise other places, our own websites, on the sign. You can have it on a piece of paper when you come into an open house. So those are the two major things. We have to have a signed listing agreement where just the listing agent gets paid, and the buyer has to have their own agreement with the buyer's agent to get paid. But what happens? Buyers don't have money to pay necessarily. Some do, some don't. And we have to think about first-time home buyers, for example. They just barely have enough money for a deposit, never mind a brokerage fee. So when we write a purchase contract, what we do is we ask in the purchase contract for the seller to pay a certain percentage of that fee. So I think there's a lot of copycat lawsuits out there. This is not over. There's many changes, and we'll kind of go back and forth, but I'm going to turn it over to Craig now. There's a lot of questions and so much to cover, but I hope that kind of explains the basis of the NAR settlement.
Yeah.
Craig.
Thank you, Betty. That was very informative. This is a big deal for the industry. And but just consider it this way, though. I mean, professionals, they are going to get paid one way or the other. And because the properties don't sell themselves. Houses, buildings, leases, rental properties. And it really requires somebody with some experience. So actually, the lawsuit, all this extra paperwork, it just makes Betty and my job a lot more important. It always has been important, but it's can continue to. We have kind of job security in that respect. So, and it's a great industry. A few things I wanted to share with you. I thought these were kind of some interesting statistics. Since we're talking about San Francisco, I just want to give a quick overview of what we have here. The sale price today, well, and let's just put it this way: 10 years ago, 2014, the average sale price for a home in San Francisco was $1,245,000. That was 10 years ago. Today, that same home is selling for $1,786,000, which is a 43% increase in home values. So there's good and bad with that. The bad is if you're just trying to get into the market for the first time and you don't have resources, that's a huge down payment that you're going to be looking at trying to provide. So we have that to overcome. Um, but the good news is the trajectory of real estate in California, it has continually been over time. It's a long-term play. No matter what's happening in the economy, hold on to your property and you'll do okay, as I think most of us have seen in our experience. The price per square foot, by the way, is hold it back to the sale price. The average sale price for a house nationwide, just as a reference, is 428,000. 428,000. Can you still get a house for 428,000 in Texas?
Yes, but it won't be a very big house and it'll be in a rural area.
What is your house worth, by the way?
729.
Okay. All right. All right, good. Yeah, the average square footage of a house is about 1,800 square feet. So that was another interesting statistic. The other thing too that I thought was really interesting is I'm just going to read this from our National Association of Realtors. They say the typical home seller has been in their home for 10 years. The typical home size is 1,860 square feet. And the typical first-time home buyer is 35 years old. And this typical second-time home buyer is 59 years old. So I thought that was kind of an interesting statistic to keep in mind. Yeah, so the good news, there's a lot of upside to California real estate. And Betty, I can ask you this question. When is the best time to buy real estate in California?
Now.
It
And that,
it was yesterday. But
yeah, it was yesterday. That's
what's the
true.
second best time?
Now,
Now.
right.
Right.
And that's so true.
So anyway, I thought those were fantastic. Just really fun going through the statistics a little bit to see what's happening, and there's a lot of optimism. San Francisco, by the way, I want to address one item that Patricia had brought up, which was people leaving the state and COVID, and how is that changing the texture of our real estate market. And there was at a certain point there was a certain exit, but it wasn't a mass exodus. People were changing their jobs. They were a lot of people that left to go to rural areas and get away from the city environment and that were working out of their home. I think a lot of those folks are kind of regretting that decision in a way because they realized what they had going for them in the city or the other, metropolitan areas was a pretty good deal. So, we're seeing actually people moving back into the city as COVID is, backed off and employers are starting to bring their offices back online. We're going to see more of that. And the other thing too with San Francisco is, just look behind me in my picture. It's a peninsula. It has limited land space. It's one of the most beautiful places in America. Despite the problems we've had, you can't get rid of that natural beauty. We are so blessed to be here. So property values are going to continue to stay strong. All right.
May I share a couple more things about the settlement? So what does this mean for buyers? It used to be that buyers would come into an open house or call you up to see a property from your sign or whatever, and we cannot do that anymore. What has to happen is you sit down with the buyer and talk about we have a myriad number of forms now that we have to complete before we can show a property to a buyer. There's a buyer broker agreement. And in that buyer broker agreement, there has to be a form of compensation, and it has to be a fixed an amount or a specified number of hours or whatever of however the commission is negotiated. And it cannot be based on this nebulous price. No, it has to be specific. So that's number one. And it has to be for 3 months only, and then you can renew it. So there's all these new rules that have been added on to our already fairly intense professional jobs. So that's number one. If you don't know if you want to work with the realtor for 3 months, there's another interim form where we can show 3 properties, but we have to have a signed agreement per the DOJ, Department of Justice, antitrust settlement. And the other thing is, when you have the seller signing a listing agreement, they have a choice. They can either say, yes, I will pay X number, 2.5 or 3% commission to the buyer's agent. That's part of our listing agreement now. There's a special form. Or they're willing to offer compensation, or they're not willing. So there's 3 choices. And the best thing that we often recommend to the seller is put the middle one. Yes, we're willing to offer a compensation. And then that will be negotiated, the amount, when the buyer brings in the offer, the buyer's agent, with a request for compensation to pay the buyer's agent. So that's all nebulous and up in the air about how that will play out. It depends on the price that the buyer comes in with, depends on the contingencies that the buyer comes in with, et cetera. So all of this is not up in the air. It's there. The whole purpose of this is for transparency. We are fine with buyer broker agreements. Absolutely. But it's interesting. It really shows our value as a realtor. A lot of people think that we just show houses. That's not what we do. I've seen lists of, 300 things that a buyer's agent does. No, it's way, way, way more than that. You can't even delineate everything that we do. So I wonder if before we talk more about this, we can talk about insurance, but the whole purpose is for transparency. We really want, because in the past, buyers have not really known who pays the commission. They didn't think they were paying a commission, but really they are baked into the price. One other, if I may, before we go up to Jack, that buyers have to come up with the money if the seller doesn't want to pay any commission, because that's an agreement that we have with them, or we just walk away from the house. We don't need to buy that house if they don't have the funds. We'll find another one for them. Lenders cannot bake that into, you can't have that as an additional cost. That really affects first-time home buyers if they don't have the fees. And this is really discriminating against VA buyers because they're not allowed to pay any fees. But that has been changed based on our fighting for this for VA buyers. So now they are allowed to pay some additional fees. So perhaps we should turn it over to Jack and talk about the ever challenging issue of insurance. Jack, can you share us anything positive? You're on mute.
Insurance right now is the worst I've ever seen in 56, 57 years in this business. But there's one thing you have to remember, and it's not all the insurance companies' fault, but the insurance companies are in business to make money. If you start off there, everything else falls into place. But the average premium for homeowners is about $1,500, $1,600 a year in California. And in the last 5 years, that's gone up by about 34%. In California, one of the things that's happened is this Zoom work, where people are able to go out and live out in the country and build these beautiful homes. Well, they're out in the country, beautiful homes, they have beautiful fires. And it is amazing, how many of these homes do burn to the ground. And when the insurance companies pay out, I've had 3 or 4 total losses. and recently one just settled. The total premium they paid, excuse me, was $3,000. They had $1 million on the home. By the time the carrier finished the claim and closed it, they paid $2.3 million. Now that's one home. You have $3,000 coming in. You have 2,300,000 going out. It doesn't really compute. And you multiply that by the size of Santa Rosa, which an awful lot of homes burnt up there, they're losing money. One of the biggest reasons that they have problems in California is the rating structures. In California, the insurance company cannot project what their losses are going to be and use that as a basis for a rate increase. They have to use what happened in the past. They cannot project losses. They can only use past data. And that really puts handcuffs on them as far as getting a rate increase. Because how do you really, prior to the fire seasons that we've had the last since 2017, you go back and you look at the losses and there's not a lot compared to what it was from 17 on with the various forest fires in California. And so they have trouble getting a rate increase. Now, some carriers, State Farm for one, has gotten a 20% increase and has applied for another 30% increase. Allstate, another really large carrier in the state, received a 34% increase. So it is creeping up and it's going to get even higher. I read an article the other day in the paper where a gentleman in the East Bay in Lafayette was absolutely amazed at the price of his homeowners. He thought there was something wrong with it because he was a transplant from Florida and his premium here was $2,500, $3,000. Where in Florida, you put a 1 in front of it, it'd be $13,000. Florida has one of the highest rates in the state for insurance. And other states, as somebody mentioned earlier, Texas is going to have the same problems, all because I believe global warming has changed the playing field as far as the insurance goes. You can always get insurance in California. Patricia had asked the question, what happens if I don't have insurance? Where can I get it? It's called the California Fair Plan, which was set up years ago to handle distress risks. Well, now it's pretty much an everyday occurrence. I probably rate the state California Fair Plan policies, maybe 2 a day. Now, do we get those? Not all, but it's a very basic fire policy and no liability, no theft coverage, no water damage coverage. So there's a lot of things missing that a homeowner's policy gives you. But the Fair Plan limits all of that. So what do? We buy what's called a wraparound policy or DIC, difference in conditions policy, which picks up liability, which is really important, and fire, theft, water damage, things of that nature that are not included in the Fair Plan policy. So, and overall, you end up with a homeowner's policy, but it's broken down into 2, sometimes even 3 policies to make one. The cost. This is interesting. I had a house in the Berkeley Hills and Fair Plan wrote $1 million on the house. They paid a premium about $5,000. At the same time, I did a house out here on 16th Avenue in San Francisco. And again, $1 million coverage. It was $1,600 in premium. So they're getting to the point where they are starting to rate homes, at least the Fair Plan is, by where they are and what the exposure is. Oakland, you have the Berkeley Hills, Oakland Berkeley Hills, which burnt in 89, I think. And they had a fire just a couple of weeks back that they thought might get away from them. Unfortunately, it didn't. But in that case, you have high rates in the fire area, low rates in San Francisco, which really doesn't have much of fire concern. It's ever changing. The premiums for that, for the wraparound, can be anywhere from $1,500 to $5,000. Again, it depends upon where the home is. And it's California Fair Plan is an answer to a lot of people. There's also carriers out there that will write a limited homeowners policy, but it still would give you enough to get in to buy that home. It would be acceptable to the banks, the lenders, as is California Fair Plan, but they charge quite a healthy premium, and in some cases, a very large deductible. I had one wraparound policy or DIC policy, and the only way they would do it was with a $50,000 deductible. And to me, that's crazy. You're almost better off going without the insurance, because it's going to be a total loss is where you really get hit. But most losses are under 50 grand. So it's really benefits the insurance companies if they can get away with that. And they try to. But again, they're in the business to make money. There are a lot of misunderstandings regarding insurance, and there's a lot of factors. You read in the paper, oh, my insurance was canceled. Sometimes it's for different reasons that are not given. And the underwriters look at four things: the roof, wiring, plumbing, and heating. That's where your losses come from. Roofs, tar and gravel roofs here in San Francisco, they're good for about 20 years. If it's not re-roofed in 20 years, a lot of underwriters will say no. The other is wiring. Knob and tube wiring is a tremendous problem in the Bay Area because they're older homes. Knob and tube wiring was great. In the house that I grew up in, that's all we had. And it worked wonders. I mean, we never had a problem with it. Most people don't. But today, you have all this electronics that you're plugging in to a system that was actually built back in the 40s or 30s, and it can't handle it. And that causes fires. Wires heat up, houses burn. So they want you to rewire the house. Now, I just had a client who got forced to rewire, and it was $40,000. So it's not an easy thing to do. Bunch of holes in the walls, and it's really a mess. The other is pipes. The old galvanized pipes, they leak. And unfortunately, you don't know when it is leaking. And you might not discover it for 2 or 3 years, sometimes 10 years. But all the damage is going on behind the walls. And that, again, becomes a tremendous problem for underwriting. The heating, air conditioning units, if they go bad, they're not constantly checked once a year by PG&E or some other people, they have a tendency to blow up. I had a next door neighbor, fortunately, she heard a big boom in the middle of the night, and we did too, since we were right next door, and it shook our house, and it was her furnace that blew up. Unfortunately, it stayed contained really in the furnace box, but it could have caused a tremendous amount of damage, not just to her house, but on probably 3 or 4 houses on the block. So to answer the question, can you get insurance? Yes. Is it difficult? Sometimes, but that's the job that we do, try to make it easy on the buyer, the owner, whatever it happens to be. And there's one thing that I neglected to mention: the cost of construction in California, especially the Bay Area, is going through the roof. Today, we're looking at about $500 a foot per 100 for replacement costs. And some say it should be $750, some are even at $1,000 a foot. So that drives up the amount of insurance on the home. Years ago in the Oakland fire, there were people that got caught with $35,000 coverage on a home that was probably worth $900,000. The reason being, when they bought the policy 100 years ago, that was the value of the mortgage. So all they did was protect the mortgage. and nothing more. And the carrier let that go on and on for years. And they have a loss, and then they really have a loss. And it was terrible what happened to them. They got paid almost nothing for a house that was worth an awful lot of money, and they lost. So today they really we push replacement costs. And we try and get the house up to where we think the replacement cost is. And you can get 10 people out there to give you an estimate on the replacement cost of the building and get 11 different answers. It's not an exact science, but we try to get it up there where it doesn't become a problem. And insurance is going to be here. When the rates go through, they're trying to get rid of that rating problem, logjam of using past losses and not future to develop the rates. They're trying to get rid of that. And once that happens, you're going to see a change in the industry where carriers will be coming back into the state and writing insurance again, but at a much higher price. So keep that in mind. Prices are going to go up no matter what we do, and they need to. Otherwise, we're not going to have any insurance. And I don't know exactly how it fits with the realtors on trying to get it. I know Betty has referred several to me that can't get insurance. We've been able to help some and not others. So it's a mixed bag at our end, but we do what we can to help them. And that's what I enjoy about this business, is helping people. So right now I'll turn it back over to Patricia.
Well, I'm sure everyone agrees this was absolutely fabulous. And I just want to acknowledge that I believe our board member, Don Persky, was in, and I didn't introduce him. And since then, other California homeowners have joined us. Claudette Good O'Neill, Jim Way, Gary McKenzie, Doug Bowers, and Janice Litvin. So now we open it. Oh, and Antonio White. Good. The pitch freak. Perfect. Wonderful. So we like you to come in early, and that's why Carl is the timer to hopefully keep everyone under a minute. And Bill Buchanan has his hand raised first.
Good morning to the panel. Excellent presentation. I just, this is probably for Betty and Craig. Can you explain the main features of a reverse mortgage?
The reverse mortgages are interesting. It's a great question. There's for those of you that aren't familiar, there's an IRS section called a 1031 exchange. And what that does is it allows you to sell one property and you take out instead of paying capital gains on it, you can transfer that section of your capital gains into another property. You're deferring your tax, essentially, what you're doing. That's in a nutshell. What a reverse exchange is, well, in a regular exchange, you would sell one property and then buy another one. In a reverse exchange, you would find the replacement property first and then sell your existing property. And so it's exactly what it is. You're just flipping it around. You're doing it in reverse. And both of those, a reverse exchange and exchange, both require a specialist. That's usually an attorney. They're called a 1031 expediter. And they'll be handling it. You can't touch any of the proceeds. The IRS is very strict about that. So whenever you get in a situation like that, it's always best to consult with your real estate agent. We have relationships with people that can make things a lot simpler for you. And you have to be careful in that too, because there's some exchangers that are not necessarily going to be looking out for your best interests, and they're sloppy. You don't want that guy. You do not want that guy. I see Tony has his hand up.
Well, also, yes. However, Doug Bowers was before Tony.
Oh, I'm sorry. Doug, you go first.
For our realtor people.
Mine is related to the reverse mortgage question that Bill asked.
Okay.
What Craig is describing is not a reverse mortgage. That's a totally different program. Reverse mortgage is a program designed for seniors to take the equity out of their homes and basically kind of a refinance, but it's a lot different. But it's a completely different program. Best would be to get a lender to tell us about that particular program. And I don't know if there are any out here currently. I did a reverse mortgage on a property when I was a loan officer years ago for a client, but it's a totally different than what you're explaining, Craig. I don't mean to.
Yeah,
No,
thank
yeah.
you, Tony.
Thanks for correcting. Thanks
Yeah.
for correcting me on that. I heard the reverse and I just went into the exchange because that's been on my mind lately. But yeah, you're right. Yeah, reverse mortgages. There's there's specialists that handle that. Betty, you want to talk about that?
Yeah, if I may, reverse mortgages is for seniors, as Tony said, and it allows them to not make any more mortgage payments anymore. So they can live in their home until they pass away or whatever. But there were a lot of complications, and I will say that over the last several years, they have changed the reverse mortgages. They've made them easier and more palatable, but you're really throwing money. I personally think throwing money away. And if you have heirs, they're not going to inherit as much, et cetera, et cetera. So there are lenders who will help, but I'm not the person to explain it because I would never do one personally. So.
All right, let's move to Doug's question.
Okay, for Craig and Betty, have sellers reduced the price that they're asking for the house because of the change in commissions, shifting some to the buyer?
Great question.
That was one of the thoughts that, well, this will drop prices of homes and so forth. And basically the answer is no. If anything, some people thought that would happen, but in general, I don't think it has. The prices of homes is not necessarily directly related to the brokerage fees. The prices of homes are because of lack of housing, period. And that's what really has to be addressed across the nation with improving, decreasing costs of building, decreasing the permit process time, et cetera, et cetera. And that's what we have to focus on. So the answer is not. I'll share with you. We have two houses on one street. I had 75 people come through on Saturday, over 150 on Sunday. And we had to price it just a little under $1 million, and we'll probably get about 8 offers. And the house across the street had 11 offers. And theirs went for about 300,000 over, 200,000 over. So the answer is no. And the seller, and I will say the seller in almost all situations are paying the brokerage fee when asked in a purchase contract. So a lot has not changed, but what has changed is we have had months of education of how to do this, make this happen, and educate our buyers and our sellers. It's been incredible. I could say more, but I won't. Go ahead.
All right, my question is for Jack. Do you have some clients that you cannot get insurance for or that they can afford?
Not yet. I
All right,
might,
good.
but at the present time, no.
I remember when we were at breakfast and Rich Correa was saying he couldn't get insurance on his Palm Springs home. Do you remember that?
Yeah, but he can.
He can.
Again, you have the California Fair Plan, which is
Okay.
kind of a safety net.
Okay,
However,
so if you can't get it anyway, you can at least get that.
you can get the California Fair Plan,
Okay.
and they almost 100% have to write it. I've only seen one get turned down by the California Fair Plan. They canceled it because of the house was almost falling down, and they didn't want to insure it. Once that happens, you can't get insurance.
Now, one other question for Jack okay, Susan Rowan, I'll go to Susan's hand before my next.
Jack, am I wrong? But I thought that you couldn't get a loan unless you had insurance.
That's probably true. So we can get insurance through the California Fair Plan.
And thank you, because what you just said, for all the people that complain about California, between that plan and the California Care where people get insurance, this is a good state to live in.
Oh, it is. It is. I was born and raised here. I like it.
Good. So Gordon is saying goodbye. He has another meeting. Now, okay, thank you. We'll see you next week. Now, one other question for Jack, and this is a personal question. You've obviously been in the business for years. Why did you select insurance as a profession? And knowing what's happening now, if you could go back and advise that young man, would you say still go in the insurance business?
Well, I got into the insurance business real simply because I was looking for a job. And I was offered a job at Marsh McLennan, which was the largest insurance brokerage in the world at the time. And it worked out. I just stayed in it. I've enjoyed it. Would I advise somebody to get in it? Yes. It's a wonderful field to get in. There's so many different parts of it. I'm one piece of it. There's company people. In the companies, there's a lot of different positions to hold. And it is a very stable, I think, industry to get involved in. And I love it when young people come in. You know, get rid of the old dinosaurs like me. Yeah.
Well, the old dinosaurs like you have so much historical experience that is invaluable. And I think that's true in every industry.
Yeah.
Where people stupidly get rid of the higher priced older people for kids that don't know anything. Now we have an important question from Betty, who, remember, is soon hoping that she and her husband can buy in California. So what is your question, Betty?
Well, so we came here from another high cost area, Washington, D.C., and the only way we were really able to buy in D.C. was leveraging the VA loan. And so my question is, what is your advice for being successful as a VA buyer in this region?
First of all, make sure that we find a mortgage broker that works with VA loans. They are important, and a lot of people don't realize that you can get a VA loan. It used to be just one in your lifetime, but now you can get another loan with VA. So that's really important. But and we have contacts who really specialize in VA loans, and I think that's really important. So that's a great question.
Now, Doug, did you get your question totally asked? And I'm getting a little confused here with hands and personal questions. So,
Yeah,
Doug, I hand it to you.
It was answered, but I have a question for Jack now. You were talking about Fair Plan being able to look forward to losses to rate their policy prices, but the other insurance companies seems like they can't. So that's a quasi-government agency doing something the others can't. Why is that?
I honestly can't answer it. I can only tell you what I've seen. How they get away with it, I don't know. But there's always been different rates for different areas. But the Fair Plan seemed to have jacked that up a little bit higher than most. It's all going to level out probably next year, where they're all going to be doing the same thing. You have a home out in the country, you're going to pay the price. You have a home in the city, you're going to get a better price. And some of the prices they're charging, and Hugh Tuck can probably add to this, up in the Tahoe regions, I've heard them up $16,000, $17,000, $18,000 for annual premium for homeowners. And that's only because of the forest.
Right, $200,000 for my sister's cabin on the lake.
Yeah.
If I may, I know people that
Now, we have an echo coming from somewhere.
have, yeah. I just wanted to add that I have clients that, or other people from talks that I've heard, they go bare. They just cannot afford the insurance. It's gone up to 50,000 from, 8,000 or whatever. And I don't know how this happens. Jack, but a client and friend has a home in Mill Valley. And she was tagged by her insurance company that she had to replace her siding or else they were going to cancel her insurance. So they must do drive-bys or have drones. She had to put 60,000 into replacing her siding in order to maintain her insurance coverage. So that also, with the problem with insurance, affects housing and housing prices. Because what happens is a seller who wants to sell doesn't have the money to do siding or replace all the knob and tubes, so they stay in their home. And then that decreases the inventory because they can't sell it. And then the prices continue to go up because of lack of inventory. It's a double whammy there.
All right,
Yeah.
Don Persky, then Mike Milstein.
I have a question for Jack having to do with earthquake insurance. If my memory is correct, it seems like after Loma Prieta in 1989, the majority of the losses in the Marina District were due to the fires. So if a homeowner has fire insurance, but not earthquake insurance, and the house is not damaged specifically because of the earthquake, but it burns to the ground, is he covered?
Yes. There's an old story, when an earthquake, you always have a book of matches by the garage door.
Thank you, I do.
All right. Before you take any advice heard in the Q&A, please check with your legal representative. All right, Mike Milstein. Mike, you very wisely muted, but now it's time to unmute.
Okay.
That's it. Perfect.
Yeah, Jack, at breakfast the other morning, you mentioned that State Farm has a liquidity problem. I've been with them for over 50 years. And are they going to make it?
Well, they're what we call a direct writer, and I do not do any business with them. However, what I've heard is they are trying to stay afloat. They are very close to going under. And that's and their parent company will not throw any money into the California company. So they're trying to do it on rate and underwriting alone, trying to make it up. I think they'll make it. They have a huge market here. And we're talking an awful lot of money. Their rating went from an A to a B, which is not good, by AM Best. And I think that that's one of they're trying to remain solvent, and I think they will.
I've been with them for over 50 years, never had a claim. Would you suggest changing to a different company or
No.
stay with them?
Stay with them. Do not, especially today,
Yeah.
do not change. Pay the premium. In fact, pay it early.
Yeah.
Because if you give them an excuse to get off, they will. And they use drones. They use satellite photos. I use Google Earth here in the office to see what the roof looks like on homes and on apartment buildings. And one of the main reasons I do is see if they have solar up there. One of our carriers on apartment buildings will not take a risk that has solar on the roof. Why? They can never give me a good answer for that, but they will not do it.
I have solar.
Yeah.
Better stay there.
Oh, California is full of solar. This carrier happens to be out of New York.
All right, Bill.
Patricia, before you go to Bill, Carol Keeley has had her hand raised for a while, but she's kind of hard to see.
Oh,
with the sun
sorry
behind
for
her.
the beep.
So
Sorry for the
Carol,
beeping
then
in the
Bill.
background. Can you hear me?
Yes.
Okay, I just want some insights into first-time homeowners benefits in California, and also if Kamala wins, will that change the landscape?
It won't change the insurance landscape.
No, there are many, many, many programs for first-time home buyers. And there's the Mayor's Office of Housing in San Francisco with very strict requirements of what your income can be, et cetera. And it has to be a certain percentage of the median income, et cetera. So there are many first-time home buyer programs. Some lenders, banks will offer some. There are the California Association of Realtors offers, we gave out $10,000 to many first-time home buyers in a program we did last year. And I don't know if we're doing it again this year or not, but that's part of our housing opportunity committee at CAR, or California Association of Realtors. So we can give you some recommendations. Craig, I'm sure you have some as well. There's lists of them.
All right. Bill Buchanan.
This is for pretty much anybody on the panel. Over the last few years, Sacramento has cranked out some legislation that has to do with housing. One of the statutes is SB 35. I believe the other one is SB 9. Pretty much overrules local control of zoning to the point where a developer can come in and basically build an apartment building in a single family community. What sort of effect has this had on realtors and the real estate operations in California? If any.
Well, I think anytime you have government intervention passing policies like that, real estate's local. So why would you want to have decision making happening outside of a local control, first of all? And, I think it really raises a question, Bill, that, there's been a couple comments about politics and policy. I think the best advice I can give anybody in regards to kind of that of the effect it has on real estate is, if you own real estate in California, or you plan on owning real estate in California, or you want to own real estate in California, whether it's residential or investment, then I think that by default, you are in politics, because you have an obligation to pay attention to the policies and put pressure on your local representatives to represent your community, because the natural inclination is to degrade our rights as homeowners and investors. So it's really incumbent upon us to really pay attention and be a part of the political process. And you can't say no. I mean, if you don't, then you're just allowing the bad forces to really affect your real estate value. So definitely pay attention to that. I haven't seen the pressure on it so much for the Senate bill that you're referring to, but Betty may have a better insight than I do on that one.
It's a great question, and we are about 4 million units short in California. And that is why, yes, I don't want government coming in and telling me what to do, yet the cities have not been doing it. The cities have not been allowing housing opportunities. And a good example in San Francisco is west of Twin Peaks. They don't want any apartments there or anything. And there's some really good land out there that could be developed. So, but the city has, it's the not in my backyard. And none of us want not in my backyard, but we have 4 million people, 4 million houses that we need. So we have to all accommodate the best we can. So those laws are for a reason. There are some cities that that have to comply by a certain time or get an extension. And there's a purpose for them because of the housing shortage, which has increased prices. If we had $4 million more homes, the prices would come down. So it's kind of a balance between cities and government, and it has to be cooperation. That's all I can say about the specifics of it. But it doesn't affect me particularly, except, anyway, go ahead, Patricia.
Mike Middlestein had his hand up again. Unmute, Mike.
Hey there. Question for Craig or Betty regarding Proposition 19. If your kids would like to move into your house and maintain your property tax after we've gone, can you amplify on how that works?
Craig, I'm going to give that to you. It's complicated, and the law that was passed unfortunately messed up my whole plan of owning property and giving it to my son. So, because of the inheritance rules. So I don't want to say the wrong information. Craig, you may be more accurate than my interpretation.
Well, great question, Mike. And whenever it comes to policy, I always review it, at the time, because it's like things change and there's nuances to all this stuff. So a good thing is there's lots of information online, but my understanding is that, it used to be you could just, will that property to your kids, they're going to get it. There's going to be a step up basis, but they still have the old property tax. But, anymore, a lot, what would happen is the kids would just, they might live in the property, but most of the time they would just sell it and just, move on. But today, in order to get the benefit, the kids have to live in the property. I think it's for 5 years now. I think that's the newest law. So it really puts, a lot of, it's fine if if your kids want to live in the house and be a part of that community, but what if they don't? And then they're stuck, in order to do that. So, it's that's just those are the rules as of today. I don't know if, how those will change. What's your experience with it?
You're asking me, I have no experience.
Yeah.
That's
Okay.
why I'm asking the question.
Yeah. Well, I think it's great. If you have, if your kids want to, take over your property, definitely, get some advice on that. It's really kind of falls more like, tax planning and CPAs, those are really key people. The other thing, yeah.
I think I had heard that anything over $1 million, then you have to you get an exception for $1 million, and you pay the difference for the value of the house, the stepped up basis.
Yeah.
So they're not going to pay the same property tax. They're going to be paying something substantially more.
They're going to be paying the difference, and that there is a cap of $1 million. You're right. And and I didn't see in here about 5 years, but I think it's a long time, but it does, hopefully that might even be challenged and changed down the road. I don't know. And the whole purpose of Prop 19 was to allow seniors the opportunity to move without, that was the whole purpose, but it backfired because of the inheritance portion of it. And that had to be put into the law in order to make it pass to help seniors get out of their homes. So it's unfortunate.
All right, ladies and gentlemen, it is almost 2 minutes to 9 o'clock. So if I may suggest, let us ask our three guest speakers to have a short concluding remark, couple of sentences. We will then thank them, turn off the recording. I need to leave to fly to Las Vegas. And Tony, who's been a very good wingman to you, could you take over? Because obviously some of our members have more questions. So with that, Betty,
Yes.
Craig, and Jack, your concluding comment about your topic.
Okay, first of all, thank you for having us. The word is realtor, not realtor. There's 2 syllables. So that's number one. But we have to be now with the new changes so cautious of our words. We cannot use customary or it's been this way or whatever. If we do put anything in the MLS accidentally, we are fined a warning and then $1,000 or a $5,000 penalty, and then we may lose our MLS privileges. This is a very serious law. The training I mentioned. And then you look at the attorney that started this whole thing with his client, when he went to get his fees from the multi-million dollar settlement, he was saying, well, what's the customary? We can't do that. What's the customary amount that we should take? So the attorneys are making the money. I think we should turn around and sue attorneys for doing their antitrust. I'd say
right, good. That
done.
was in a magnificently expanded 2 lines. Craig.
Well, thank you everyone for joining us. My 2 lines are: buy San Francisco real estate as soon as possible and consult with somebody like Betty or I or Jack, and we're able to work together collaboratively to find that property for you.
Jack?
Well, again, thanks for having us. And the only thing I could say, it's going to get better. It can't get any worse.
Good. And as president, my concluding remark, my father, who was a Rotarian, always used to say, do business with the Rotary Club members first. And I would say, do business, seek advice for our experts in the Golden Gate Breakfast Club. Because as Dad always said, you know they're going to be there next week. You cannot guarantee that with just somebody else you might find. So with that, it is a pleasure to hear such an interesting topic that affects most of us, and also from our very friendly experts. With that, let's close the meeting recording. Tony, thank you.